Ladies and gentlemen, I purchased HIMS. I'm going to tell you why, how much. I'm also going to give you my DCF valuation model. So let's get started. By the way, Shamow says to like and subscribe. So yeah, what's going on with HIMS stock? HIMS stock is currently trading at $22.15. It has skyrocketed recently, but let's go into it further. Market capitalization, $4.7 billion. Now, let's first get off on how HIMS works. Oh, I phrased that incorrectly, but let's just continue. Get up. Never mind. Okay, so yeah, what HIMS does is HIMS is a telehealth company that focuses on stigmatized medicines. Notice the word stigmatized. This is what differentiates them from, say, Teledoc and any of the other ones. And there's a good reason why, and there's a reason why this is beneficial to Teledoc. So this is straight from their website. How does HIMS work? First, complete an online intake form. By the way, that form is huge. I'll show you that in a later video. Oh my goodness. So yeah, first complete an online intake form to give you your healthcare provider information about your symptoms and medical history. Then a licensed provider will assess that information and determine the right treatment option for you. For states that require a video or audio visit, you'll be offered available times and dates to schedule your online visits. For states that don't, a provider will send your treatment recommendation to your chat inbox. If your provider determines treatment is right for you, it's delivered in discreet packaging to your shipping address. So again, this is the differentiator for HIMS. Stigmatized medicine. Discretion. So let me tell you this. Let's say you are, let's just say you're an old guy and you're having trouble performing. What are your options? Your options are, number one, go to your primary doctor that you've seen for, 30 years? And just tell them that little Jimmy isn't working? That's embarrassing. I wouldn't want to do that. I mean, who wants to do that? Not to mention all the other people that you have to tell. You have to tell the nurses, receptionists, everybody in the office is going to know. And then also, if you went online, it's going to be pretty obvious what's in the package. So what HIMS offers is discretionary services. So it comes in discreet packaging. Nobody knows what's inside that packaging until you open it. Also, the online visits are, telehealth. So you dial into them. It's an online chat portal. And yeah, that's the whole deal, is that you get these medicines that you need without the friction of getting the medicine in traditional means. And this is what also differentiates, HIMS and her health from, say, Teledoc. Teledoc is a generalized solution. Speaking of, talk about Teledoc. Teledoc stock has plummeted from almost $300 per share to $9.71 per share. The old phrase, buy low, sell high, or in my case, just buy low and hold forever. So yeah, Teledoc, do I buy at these prices? Well, let's see. Actually, the 5 years down 84%. But if you look at their peak, it's down much more than 84%. Holy cow, has this stock plummeted. But the thing about Teledoc is a generalized healthcare provider. It's not. They want to service everybody. And as a result of servicing everybody, they got to stock all the medications. They got to have doctors in all these different fields. And there's a lot of costs up front. So Teledoc loses a lot of money. Not only that, their revenues they've trailed off. It went from $1 billion in 2020 to $2 billion in 2021. Because remember, the COVID boom. Everybody went telehealth during the COVID pandemic because everybody's locked into their house. The doctor's offices were generally closed for these types of services. So everybody went to telehealth. So telehealth revenues skyrocketed. So went to $2.4 billion in 2022. Remember, this is Teledoc, not HIMS. To $2.6 billion in 2023. But you'll notice the trailing 12 months is also $2.6 billion. So Teledoc has stopped growing. Now, normally this wouldn't be an absolutely terrible thing for an established company. The bad thing here is that Teledoc's operations are losing money, net income, from 2019 of negative $98 million to trailing 12 months of negative net income of $233 million off of just 2-point-something billion in revenues. So it's a company that's kind of just losing a lot of money, and that's why I don't invest in Teledoc, is they're not profitable. Show me the money. You know, Jerry Maguire, show me the money. Show me the money. Teledoc does not show me the money. So, also, United Health Group's Optum eliminates virtual care service. So, all telehealth companies are unprofitable, except for one. And that one is HIMS. Actually, yeah, I'll just show it like that. There. I'll just do this. That's the image. So this is actually a HIMS advertising. This is one of the other differentiators that separates HIMS from their competitors. No other telehealth company can advertise quite like this. So they could sort of go a little risque in their advertising. And this is actually a printed advertisement. They have printed advertisements just like this in subways. And they have other ones as well that are just as sort of risque. And what they do is it kind of sells the point. Doesn't this sell the point of exactly what the medicine's supposed to do? It does to me. And it's effective advertising. It's very effective advertising. But it's not borderline, crude. It's not crude, but effective. So yeah, actually, let's go back to that. Okay, so what else does telehealth give you? What does HIMS give you? These are the verticals that HIMS focuses on. One's sexual performance, regrowing hair. Remember, it's all stigmatized. Losing weight, anxiety, longer sex, and smoother skin. So these are the verticals that HIMS concentrates on. And they added a couple of these verticals just in the last year. The money makers are obviously the bedroom stuff and also losing weight. And I'll get into losing weight in just a second. So yeah, also one of the reasons that HIMS is able to give you the reason that they're profitable also is not only are these very high margin products, but they're able to inventory. They're able to stock just a few select products. They only need to stock, a small subset of the entire medicine market. Teledoc has to stock everything. HIMS just has to stock a couple of things. Oh, and also on the HIMS questionnaire, what they do is they recommend you a monthly package. A monthly treatment package is what they do. So they charge their customers every single month. But they only need to visit the doctor that first time, or maybe every 3 months. I don't know. So it's a few visits to the telehealth, online appointment to the doctor, but it's a monthly recurring subscription. And I love recurring subscription models. Here is another advertisement. Get ED treatment started for only $5. And what's the quote say? Should have done it years ago, and I feel like the young stud that I always imagined I was. Again, only HIMS can get away with this. I can show my face again, I think. Yeah. Here I am. Let's continue. So yeah, what is another thing that differentiates HIMS from the others? HIMS has zero debt. Zero. Z-E-R-O. I love that number, especially in today's high interest rate environment. So yeah, things are going great debt-wise, lots of cash. They just have cash to spend, and they don't really need to spend it. I'll show you in a second why, but everything's great on the balance sheet side. Nothing negative to speak of here. So I'm going to take you back in time, sort of like a time portal. getting in the DeLorean, Back to the Future. Okay, so when I made the decision, this was after HIMS's Q1 earnings report, and is after the Q4 earnings report, before the Q1 earnings report. So actually, forget about that last vertical bar, but you can see that HIMS's subscriptions are growing exponentially. It's about 40% per year currently. It's going to trail down, but it's growing very well. Okay, so this is the time portal. So back in Q4 of 2023, HIMS reported revenue of $247 million. That was up 47%. Subscribers was up 48%. Gross margin, 83%. Now, net income, $1.2 million. Okay, so this is the thing. This quarter was the first quarter that HIMS became a profitable company. And it says it right here. This is the first quarter that HIMS has become net income positive. Adjusted EBITDA was $20.8 million, which is an 8.3% margin. You'll notice that long term, they expect adjusted EBITDA to grow to 20 to 30%. So they're expecting that to at least double, more than double, their adjusted EBITDA margin, the margin. So they're expecting much better performance in the future. But remember, this is all 1 quarter out of date. They've gone 1 more quarter past this on the results, which I'll show you. Cash and short-term equivalents were $221 million, and long-term debt, 0. Love that number. However, there are minor lease obligations of $9.95 million. The outlook at the time for Q1 2024 was growth of 40 to 43%. They crushed it. Adjusted EBITDA of $22 to $27 million. Again, they'll beat it, but I'll show you that in just a second. And FY 2024 revenues of $1.17 to $1.2 billion. So let's just, and they also estimated adjusted EBITDA $100 to $120 million. Okay, so again, this is the time portal. This is Q4 2023 is what we have to look at. They just became barely profitable. That's why you can't even see the net income, the operating income bar, because it was basically 0 operating income at the time. But as you can see, revenues were increasing very nicely. The net income, the orange bar, was increasing very nicely. Everything is going the right direction. And as you can see, the stock skyrocketed after that Q4 earnings report. It just jumped 50% over a couple of days after it was reported. Now, I was thinking, I like the company. They just became profitable. What am I going to do? Did I miss the boat? Do I FOMO in now at $15 a share? So I just sort of just waited. I went, I don't know if I can, convince myself to purchase a stock that skyrockets 50% in just a couple of days. It's hard for me to pull that trigger on a purchase. It's hard. It is hard. So I just waited. I was looking at it and I was waiting. Just saying, you know what? Okay, so let's get into my DCF. This is what drives my investment decisions. So starting in 2024, the company was expecting revenue growth of 40%. Now, I'm trying to be conservative in this DCF. So actually, I'm just going to focus on online because their wholesale really makes up such a small portion of their business. So I'm just going to focus on online. So yeah, so I was predicting 2025 that revenue growth would plummet to 25% in 2025. Say that's 5 times fast. So I'm trying to be a little bit conservative in this DCF report. Oh, and also, this is one of the things that differentiates me from other YouTube finance channels, is I give you the goods. I give you the goods. How many others just give you their DCF valuations for every purchase they're in? Every purchase. I've given you my DCF valuation model because I need to show you what I have. I give you the goods. Now, granted, this is a little late. I made this over a month ago. If you want my real-time DCF, if you want also my full spreadsheet, this is sort of a highlights reel. If you want my full DCF spreadsheet, you can head on over to my Patreon. You get 7 days for free. You can view all my DCFs. I cover about 15 different companies. You can view them all. So anyway, I predicted in this more conservative model, 25% growth in 2025, 20% 2026, going to 15%, 12%, all the way down to 6% in 2023. Now I was thinking, here's the same thing in graph form, total revenue. So that from those numbers, in my base case, I had an implied share price of $46.73. Now, when the company at the time was at $15 per share, I could see myself buying the stock, assuming that I think they're worth $46.73. Because the thing is, this is my implied share price for HIMS. I think that this is what they should be worth today. And I just give Wall Street 12 months to catch up to what I think they should be worth, is what happens. So what happens was, I made this DCF is back on May 10th, and at the time I had an implied upside of $261.72. Notice that this is May 10th. This is actually a bit after their Q1 earnings report. Actually, let's go back in time a little bit, or is it forward? Backwards. Backwards to here. So May 10th it's about like, I think it's around here. I don't know. Doesn't matter. But at the time, the share price was $12.92. So I was all about to pull the trigger. I was still researching the company. I don't like to pull the trigger until I do a full research on the company as well. And that's what you'll also get on my Patreon, is a full company analysis report. I have a 16-page report on HIMS on my Patreon. You can get it for free for 7 days. You can download it. You can go to my Patreon, sign up for free for 7 days, and just download it and keep it. And then just cancel the subscription after 7 days, and you get to keep my analysis on HIMS. You don't get any future analyses because, you canceled the subscription, but you still get whatever I created up to this point in time. So what happened is the CEO of HIMS, Andrew Dudum, he's a Palestinian American. Nothing wrong with that. But he created a unfortunate tweet. He said, "Moral courage is greater than college degree. If you're currently protesting against the genocide of the Palestinian people and for your university's divestment from Israel, keep going. It's working. There are plenty of companies and CEOs eager to hire you, regardless of university discipline. Apply here," and then he sends a link to their career portals page. Now, this created a controversy. People were upset because this is a very opinionated war. Either you're on one side or you're on the other. There's very little middle ground in this conflict. The Israel-Palestine war, shoo boy. I'm not getting in the middle of that one. I'm not going to show you my thoughts on that one because I'm not going to make the same mistake that he made. So what happened here was, hey, you can still hear me. Okay. Yeah, HIMS stock plummets after CEO Andrew Dudum offers anti-Israel protesters jobs. The stock plummeted 11% in one day that Friday. And this was on May 4th. May 4th, stock plummets 11%. Now here's my problem. Here's where I went, uh-oh. This came out May 4th. Their earnings are due soon. This was a couple days before earnings. And not only that, there's a weekend. This was on a Friday. So you had Saturday and Sunday, no stock trading. So I had to make a decision. Fast. And my decision was to buy as much stock as I could, as quickly as I could. So as you can see here, this is where we're at. This is the timeline of where we are at. So you had a general decline in the stock after the Q4 excellent earnings report. And you can see the subtraction from the tweet here, you can see the 10% decline, 11%, whatever it was right here. And I was right here going, I gotta buy now, because I knew that Q1's earnings reports were going to be phenomenal. I knew I suspected. I'm not a fortune teller. I suspected, based on prior earnings reports, that their revenue was going to grow greatly, that their net income was going to go from basically break even to a very strong number. So I felt, they're becoming profitable. They're becoming very profitable. The stock is down. The stock is almost as it was before their Q4 report. Almost. I got to get in now. So, what did I do? By the way, this is on my Patreon portfolio. This is a smaller portfolio of mine. I created this portfolio about a year and a half ago. And again, I made these purchases on May 3rd. If you want real-time access to my purchases on my Patreon portfolio, it's on Patreon. You'll get real-time access to the minute that I make moves in the portfolio. YouTube has a purgatory period. You guys have a 30-day purgatory period. It is what it is. So yeah, on May 3rd, I put in whatever cash I had in that portfolio into HIMS. I have other portfolios I also invested in HIMS, but this is the Patreon portfolio, the smaller one. So at the time, I had $1,000 in cash. So I went, you know what? Put the $1,000 in HIMS right now. And I did. That was on May 3rd. What did I also do? I put more money in. I injected cash into the portfolio. I purchased $5,000 on May 6th. And then also, let me hide my face. And also another $5,000 on May 7th. So what happens? What happened after my purchase? Did I time it correctly? Remember, I wasn't trying to time the stock. I was just thinking this is a great price for a great company. That was what was on my mind. I didn't really care in the short term whether the Q1 results were going to be blown out of the park or not. I was just thinking, great company, great price. I got to get in before the results because I had a sneaking suspicion that they might have beaten expectations. So I got to get in now. So what happened? Q1 earnings results come in. Revenue $278.2 million. Growth of 46%. Net income $11 million. Now it's noticeable. Now you can see it. Adjusted EBITDA is up 434%. Operating cash flows up 172%. Free cash flows up 70%. Subscribers up 41%. Okay, so for this, don't really focus too much on the bottom line numbers like adjusted EBITDA, operating cash flow, free cash flow, whatever. That's not really the point here because the company just became profitable. They're newly profitable, so these numbers are going to be large. When you go from 0 to 1, that's a huge gain. When you go from like 0.1 to 2, that's a huge gain. But when you go from 2 to 3, that's a lesser gain. 3 to 4, an even lesser gain, and so on and so forth. So right now, that's why the 434% looks nice, but I don't care. I do not care. What I do care about is the subscriber growth. 41% is a very nice subscriber growth. However, it is slowing down. And the monthly online revenue per average subscriber is $55, and that is staying steady. Remember, these people are on monthly plans. Now, what else happened since I purchased? This I did not expect. Was the GLP-1 craze. Now, I knew this was going on, and this is a South Park episode on that craze. Now, what I did not expect was Hims and Hers Health to partner with a provider to sell generic GLP-1 pills that are going to be 85% less expensive than the other pills from Wegovy and Ozempic. Significantly less expensive. These pills are going to be, because it's on there now, $200 per month, whereas the others are several $1,000 per month, $1,350, $1,000. What would you rather spend? $1,350 per month or $200 per month? Choice is yours. So yeah, they undercut the brand names, and this I think will feel huge performance for HIMS. It is massive. So yeah, $200 per month, and this is just a huge move by them at the right time, and this is great. How's the stock performed? Now again, this is a very short timeline. I've only owned the stock for a couple of months, but as you can see, I'm up between 79% and 97%. So had you bought when I did, you'd be up these amounts. However, you didn't know I bought when I bought. If you're a Patreon subscriber, you would have known because they knew. With that said, Shamo says to like and subscribe. Thank you for watching, and I'll see you in the next one.